Hello everybody. My name is Avikshit Vijay, and I've been trading in gold for the past 8 months. I am learning in the learning phase myself, and I've primarily started this channel only to share my learnings with you, and I want you all to learn and grow with me. So, as I identify trends in the market, new changes, I would like to share it with you and probably help you in your learning phase. The primary purpose is to share my learnings with you all, which I've learned in the market, and grow with me. So I'm also in the learning phase. So anybody who's starting forex or starting with gold can also you know learn with me, which helps in yeah proper sense. To begin trading with, you need to mark the support and resistance levels. So how do we know if the support or resistance marked is a valid one or not? For that, okay, before starting off with that, let me tell you that there are primarily two types of zones, one major and one minor. So major zones are marked with black, as you can see, blacks, and blue ones are the minor zones, right? So a major zone is where the trade is expected to reverse completely, and the minor zone is where which forms a basis for your trade, right? So what do we know if this level is correct? Resistance, resistance, support, support, resistance. Is this valid? Yes, it is valid. And next, this zone, support, support, resistance, break, attempt, fail, then resistance again. Then this level, support, resistance, resistance. Valid zone, yes. Here, support, 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 still sustaining. So levels are fine. So how do we trade now? So there are particularly a few concepts that we will be using to trade gold, right? So one of which is liquidity grab. Okay, don't get panicked by the fancy terms that is being used, because it is pretty simple in practice, right? So liquidity grab, invite setup, and on the basis of supply demand or the support resistance zones, right? So invite setup at the first place. So when one level, say this support has been tested multiple times, so it is obvious that at support buyers will come, right? So when buyers are invited, or when that support has been tested multiple times, it is called the invite setup. So see, 1 2 3 4 5 6 7. Now buyers are invited multiple times. So in this scenario, the probability of the market breaking this particular level increases because it has been tested multiple times, and the magnitude of buyers at each level is decreasing. So see, first test it went up to this, second here, third, okay, it did this, 4 year, 5 year, 6 year, 7 year, no movement. You understand? So that is a big criteria for the invite setup. But invite setup is most effective when it is formed in the major zones. Okay, so minor zones में अगर invite setup form होता है तो we can plan a fake out of the invite setup. So in such cases, all the buyers are here, right? So buyers will place their stop losses below this point. So market can ideally go remove those stop losses, grab the liquidity in the market, and then we can plan an upside trade. So let me tell you why this happens. Okay, the liquidity grab, that concept. So there are big institutions like hedge funds, Goldman Sachs, and all, as you've heard of, trading in billions and millions of dollars. So in that cases, we as retailers who trade with small lots, only a millions of retail traders like us who come together to form one institution's trade size. So in that case, they need a bigger amount to liquidate their positions. So say if they have shorted here, in such cases they need an obvious breakdown where all the retailers will enter to square off their positions because their liquidity will be here. All their so there it is obvious that a buyer needs a seller in the market, right? So in such cases, a buyer, um, so retail, the institutions, if they are sold here, how do they square off? They will have to buy, and for buying they need some sellers. For that purpose, they will create a selling setup. So level breakdown may, if will you enter? Yes, you will short, right? When this level breaks with a good candle, you will enter on the shorter side, right? In such cases, you will become the liquidity for the institutions, and they will use this liquidity to pump the market. You understand? So that is the concept of invite setup. Invite setup at the minor zones, which forms as the liquidity zone, then liquidity grab, and then fake move, right? So we've learned the basics now. Let us move on to the trade. But before that, give me a minute. Yeah. So thank you for waiting, guys. So we will start with the plan for the gold, right? So first of all, to plan trades, you have to identify what the trend in the market is. So a strong trend is ideally defined by minimal pullbacks and more momentum. In this case, if you see down move, small pullback, down move, right? So in this case, then up move, small pullback, up move, small pullback, up move. So in these cases, the momentum trend is strong and clear, right? However, in cases where let me show you. Wait. See. Here. Up move, majorly removed. Up move again, removed. Up move, pullback. Up move, pullback. In such cases, the momentum is not strong because the pullbacks are much more bigger than the move itself, right? So in such cases, the trend is weak. So the trend can be identified by Fibonacci retracement. So in this case, if you see the sell side retracement, it has come up to 0.6%, which means that the sell side trend is weak. So a strong trend is ideally characterized by retracement up to 0.382 to 0.5. So this will be the ideal pullback zone. However, if it retraces more than that, the possibility of it being a weak trend is pretty high. So if you see downtrend has retraced up to 0.6, meaning the trend is weak. And if we see this uptrend, it has retraced till 0.382. So ideal reversal zone or the trend continuation zone is 0.382 to 0.5. I understand my point? So we have identified that one trend is bullish, right? Why? Because Fibos is in between of 0.3 to 0.5, right? Then what is the second thing that we're identifying? Invite setup at a minor zone. So invite setup at a minor zone implies that the possibility of trap is quite high. If you can see the date, today is 10th October 9:17. I'm recording this video. Tomorrow the market opens. Today is Sunday, so tomorrow the market opens. So tomorrow our trade plan is ideally towards the buy side. How will we enter? I will come to that later, right? So invite setup at the resistance. So where are all the buyer stop losses? Below here. So market can come remove these, and then we can plan a bullish trade. You get it? Yeah. So what is the second criteria? Oops, my bad. Sorry guys. What is the second criteria? Invite at mini or minor support. So in this case, fake out is quite high. Then the third point, how do we enter? Now for entering, okay, let us put ourselves in the shoes of a retailer. So before going to the psychology part, I want you all to think how the institutions will trade. So, say you have 100 kilos of vegetables, and retailers or the customers are only willing to buy 30 kgs. What will you do with the remaining 70 kgs? You'll have to give a discount or attract people, right? So, you are attracting such customers by giving this fake out, right? So to grab their attention, you're giving this fake out, inviting the sellers, and then you will give a liquidity grab and up move. So in this case, so okay, breakdown, sellers are here. Okay, now let's say if it breaks down and then comes for the retest, what will happen again? Those who didn't sell at this breakdown will sell at retest because they got another opportunity. Market is not your relative to be coming repeatedly at your entry point and giving you invitation to enter that I'm going to fall, come short me, come short me. It is not your relative, right? So in such cases, one sellers are here, retest sellers are here. So any red candle at this retest zone will give us confirmation that the fake out is proved. But it is to be noted that this level should not be faked out before this, right? If this is faked out, the plan has to be changed accordingly. So our plan for tomorrow will be breakdown, sellers will be invited, retest, sellers will be invited, and then we will enter on this crossing when it comes back to the zone with this as stop loss and this as our target. To be precise, let me place the tool, right? We will keep a 50 pips this range, 50 pips stop loss, 45 pips stop loss, and at least capture 15 pips or 1 is to 3.5. So this will be our trade plan for tomorrow or the next 2 days whenever the setup is formed. So before reversing, uh, there occurs two types of formations. One, it breaks down, retests, and then goes up, or it breaks down and halts, multiple time retests. So breakdown and halt. After breaking down, it is waiting for the retailers to enter. So it is giving you invitation that I am going to fall, come down, I am still not fallen, I am going to fall, come down, come down, come down, and short me. So that is not a good sign. Anywhere you see a halt after a breakdown of an obvious level, you can carefree go with the opposite side trade because the trend is into the other side after identifying the trend. So this is also an M pattern where you will short, retest me, you will short. So we will plan a buying side trade against the retailers. You got my point? So yeah, I will keep you posted on what happens tomorrow, and so have a profitable day. Thank you. And before going, I will show you my learning account. So see, I have $90. I deposited $50 and I've grown it to 90 in the past 2 months. So this is my PNL, my closed orders. So the plan is pretty much set, right? Nothing new. So let us follow the plan, and discipline is our first goal, right? Thank you. Have a nice day.